Hello traders, recording this late, going to get it to you today in the Monday morning or Tuesday morning, getting out late this week, just getting ready to leave town. So wanted to go over first ES with you, S&P 500. We broke out of this wedge here. We're going to continue up. However, I would expect a pullback at this level before we continue on up to the level of 4209. Now 4209 is a big spot. We need to break that to continue up to the next level of 4340. So expect a pullback here, but a continuation to the upside until we get to 4209. So we're long till 4209. There we're going to collect a lot of funds, and we're going to wait till that breaks through 4209, and then we're going to continue it up to the level of 4340. Now once we get to 4340, it's a little less than that. I'm going to bring it down here. Once we get up to the level of 4324, be very cautious between here and 4209. Very cautious in that zone. We believe that there's a place in there. It could be up at the top, or it could be midway through where there's a reversal in play. We're going to outline this a little bit better. You'll see it on the NASDAQ, but we haven't done the markups on the ES yet, but I believe it's somewhere in that zone that we could see a reversal. So be very aware of that. In the NASDAQ here, we see there's multiple channels. So we have this original one from here to here, which we came up, we have broken through that now. I expect a pullback on this maybe to about a level of 13,094, and then we swing back up to 13,739. Somewhere around this area, we need to be very cautious. There could be a channel up in here where around that 13.9 level, maybe a little higher there, we could see a reversal. We see a very big resistant level up here at 14,061. So we need to be very cautious when we start reaching up in these zones here. Just keep this on your map because it's going to take a while to get there, probably most of April to get up in there probably. But we have come down. We've retested this channel that broke right here, and it's retested here. Its swinging point is right up in here. It could be a little higher, but it's right up in this zone. And we want to be cautious there because we could get a new move to the downside after that. But it's in this area we're going to really take the majority of all of our profits off. And then we're going to just hold tight and see what happens up in this zone here. Remain cautious before we re-enter another trade, either long if it breaks above this resistance zone here at 14,073, or go short for a swing move way down. We'll look at that later on, but that's what we're looking for in NASDAQ. So I did not trade this move, but it's starting to push its way back out. This is what we had markup for profits on that, but it got too rangy down in here. I didn't like the way it was ranging, so I got out of it. It was my decision to do so. If you stayed in it, good for you. But again, looking for this whole move to break out and go higher before it goes lower. So a continuation, we're coming up on resistance here. We're going to have a pullback, so it's going to pull back like so, and then we're probably going to have a continuation up like so. So that's what we're looking at for the US 30 or the Dow on that one there. We're still long gold. It was a great trade last year. It's becoming a great trade this year. We're long gold to about the 2006-7 to 2050 level, somewhere up in here. This is breaking out today, and we're looking for it to continue up higher. And then to this level here, we're going to exit and stay flat gold, kind of see what it does. If it wants to turn back down and head down, or if it wants to break out. If it breaks out of this channel, as you can see the channel, we are going to go ahead and latch back onto it. But we are long gold till those areas. Everyone is goo goo gaga over oil this week. Not us. We got out of our short and we didn't go long, but we're looking for the long to go to about 84, 87. We're looking for a breakout up to that level, and then we're going to look to go we're going to look to go short oil again. Okay, we have a nice channel up there. We're just going to mark that out here, but it's right here, and that's coming down there. We're going to look to go short there. We believe that things are going into a deflationary state, and that means oil is going to go short. It's a nice little head and shoulders too, if you want to put that on here. Here's your shoulder there, and here is your head up here, and then here is your other shoulder over here. So we're going to look for gold right up in this zone. It's getting very close right now. Maybe to the channel line, it might percolate a little bit above that, but right about there, about 83.65 to 85, we're going to look to go short gold, and we're going to swing it down. And I think gold's going to move quite a bit, maybe down into the 52, the 40 range, somewhere down in there. We could see not gold. I keep saying gold because gold's on my mind. Hey, what can I say? This is black gold. Oil is going to move down into those zones. So that's really what we're looking for in oil, to go short it. We believe that's going to happen here soon. 10-year yield is done. It's reached its last high and rolling over, heading down to 3137. And so gold's going to continue to go up. That is the next level of support. We're going to see if it holds there, but expect it maybe to do another bounce and then head further down. As we know the situation with the Federal Reserve, banks, so forth, we're going to have to lower rates in order to combat this problem. Just a little bit more on the problem. We understand that people are not getting the returns they want from banks. They're withdrawing. They're going into money market funds, or they're just even buying treasuries. And so you're having these mass withdrawals from banks of savings, and this is going to cause problems for the banks, and they need to bring people back in. So they're going to lower rates. That's going to give you a less of a return on bonds or money market funds. People will bring back their money to the banks because it's more convenient, and that's what the hopes is. And then also economic growth, more loans due to lower rates, yada, yada, yada. It's the same old thing. It's going to repeat itself over and over until it spirals and dies. But that's pretty much it on that. That's why we're going to have rates head down here. VIX is trying to break support here. I believe it does break support. It comes down to the 16 levels. From there, I'm going to be very cautious on this. We're looking that this could have a very good opportunity when it was setting up here or breaking through. It did not. It failed. And so this failure here means that we're probably going to go lower into the 16 zone and kind of stay right in this area. Probably go sideways like we did here. But it looks like the VIX is probably going to stay in this area a little bit. We're going to get a little rise in it here and then roll back over and stay in this zone of about 15 to 19 there for a while, until it breaks out to the upside. But this thing will pop high when it does go. But for now, it's going to stay low and slow. Dollar we were cautious on because of where it was looked like it would head to. We thought it might head higher, but it's kind of stabilized here. It has not broke this low yet. Dollar moving very slow. Until it breaks this low, we'll add back on. We took some more profits from their shorts up in here, just as a cautionary state, but we still have some shorts on from up there, and looking to break this big support level here at 101, and we want to see this thing drop down to about the 96 zone when it does, and we're going to put in heavy there to that last move, and then we're going to be out a dollar altogether. But looking for one more move down into the 96 zone, maybe 98, and then we'll be out a dollar for good. Well, at least to the downside. Euro Aussie bumping and grinding to get to the upside, but our target is still in play to 1.63886. That's where this thing's going to head to next, and that's where we'll go ahead and exit this trade. Pound yen, pretty much the same thing, bumping and grinding around, but we are going to exit the pound yen right up here about 169.30. We're going to take the profits there. We believe it gets there. So does it get there this week? Maybe not, but it could push back down. to this level is 163, and then back up to that level of 169. We're going to call it 169.30 where we're going to pull this thing at. Dollar yen, we are short this. Now we're looking for a level down here to hit of about 122. We need to break this support level at 127.42. So that's the first big level we have to hit. We may get some more bouncing there before it comes down. But once we hit this level of 122 zone, we're going to cut this loose. We believe this is going to head back up to the upside, and we'll get long it somewhere down in here. Bitcoin has hit a big resistance zone. We can see why over here. This is a big support zone. So a big resistance zone. We see accumulation happening here. We expect a breakout. I am long this now and looking for a breakout to about 3,700. So 30,700. So is where I'm looking to take this next. So I am long this. We see an ascending pattern happening here. So expecting it to blow out to the top side. It's going to be bumpy here still, so don't expect this to happen overnight, but I do expect a break to happen at least up to that level there of about 30,700 is where I'm taking this to. Just an update, we see the emerging markets are bouncing. We had the support zone right in there, and it's bouncing off this. I expect this to go higher, looking for a move somewhere up into this swing level of about... could be right around this zone here, about 44 and some change, maybe a little higher, 45. Let's get up there. Let's make it about 45.37 where I think this is going to go to, which means we'll have an expansion in emerging markets. So look for money to start flowing globally. That means more liquidity. That means markets go higher. And that kind of fits in with our plan. As of right now, copper is not feeling that expansion. It did break to the downside and then broke back up, which was a good sign that we would have expansion in this, but it has since rolled over out of this. So we're just going to look at this as a big range right in here, kind of a big, if we want to take it like this, we're looking at something like this, and we're going to see if it breaks out of that to the top side. But if it does, we are looking for this to move on up to about a $4.43 level. Again, this is just kind of, again, an accumulation process. Probably will come down further, and then we look for a bang up to the top side. We'll see if that happens. All ships rise with emerging markets, including copper. We should see a rise in this and a breakout to that level, but we may look to go long it down here at $3.90, somewhere down in there. We may look to go long copper. We'll keep an eye on that though. We're going to finish up with the Euro-dollar futures. We see that this has come down. It's starting to make a rebound today to the top side. That tells you risk is coming into the market. They're hedging. That's why you're seeing gold go up today. You're seeing yields come down on the 10-year. This is going to start to move top side if it breaks out like we think. This is the December 23 contracts, by the way. We think that this will go to 97. And if it goes to 97, we're going to have a large move in gold and in the in the treasury market. So please keep an eye on this. It looked like it was starting to break through here, and then it flashed back up inside of it, which is a very bullish sign. We want to look at this. A break of this level here, back above 96, tells us we could have a very good chance of going to 97. That means risk, risk, risk. People are trying to hedge against it. So just watch for this to continue to the upside move and the breakout. Once that happens, let's go for gold. It's down in yield for treasuries. That's what we're looking for, and it's up in markets indexes. So we're going to leave you there this week, and hope you guys have a good week. Again, we're looking for some kind of pullbacks in the indices, but overall, we're bullish indices until we're not. So remember that, bullish gold. We're bearish oil on this pullback. We know everyone's real excited about the Saudis reducing output, OPEC reducing output. We don't think that's going to continue. Generally, that's a sign of that they're trying to crush the market, but the market's going to return the favor, and they're going to eventually probably increase output. It's going to hurt them. So keep an eye on that. But again, we expect oil prices to turn around and drop again, probably over this next few months. All right, take care. Have a great week. Good luck to you on your trading.